Hey guys, welcome back. In today's video, we are talking about why the short can't continue, the AMC breakout, the first short to go, and many more in this video. First, we're taking a look at this. This goes out to all those embedded pay shills, the handlers, the hedge fund CEOs, and market makers shorting AMC. Close and exit while you can, because 4 million plus AMC retail holders aren't leaving. We continue to add. Can you continue to extend your swap risk? So many of you will know by now there's been a massive liquidity problem for the short sellers, but not only that, we've obviously talked about how some of their positions are not going well, some of their swaps, some of their short positions, some of the over leveraged positions. And this is something that we have always said. Now, firstly, there is something that I obviously want to add on to this in terms of close and exit while you can. Now, this, in my opinion, only applies to some short sellers and not all of them, because the ones that are too big in this obviously aren't able to cover. When you take a look at Citadel, when you take a look at UBS especially, you understand that they are not in a situation where they can actually exit any of their positions. Obviously, there will be some short sellers of AMC who are sizing in terms of smaller in comparison to the others, and they can exit. But the problem is that because this short position, even if they are small in relative to Citadel, to Virtue, to UBS, and all these others, it is still a large amount. So whilst they can exit, they will obviously still take a loss. And more importantly, is that even if these small short sellers were to exit, it could also trigger the squeeze. And if the squeeze were to be triggered, then obviously that will actually force out the mid-sized short sellers, and of course, finally, the large-sized short sellers as well. But ultimately, something that we've always known is that right now we have the power over them. The reason for this is because we can continue to add. Everyone knows that the only cost for obviously buying into AMC is the initial amount that you're buying, that you're investing. So currently at 278, of course, if you're buying 100 shares, you're spending 278, and there isn't any more cost after that. The only cost being will obviously be time. Now, for the short sellers, not only are they spending time, but remember, they have to spend more money to create these synthetics. They have to spend more money locked aside for the margins. They have to spend money to make sure they can finance these short positions. And so this is the difference between the cost for the apes and the cost for the shorts. And that's why we are always going to beat them. And you can see a story in two pictures. CEO Adam knows exactly what he's doing. When you take a look at, of course, the AMC movement, and you understand that Adam Aaron is obviously holding a large amount, but not only that, is that ownership in HYMC, something that we've talked about in the past. And we talked about how this particular investment will obviously put AMC in a better position, considering everything that's happening now. I want to specify is that I'm not saying that the HYMC investment is what's going to trigger the squeeze, but it's something that I think will speed up the process and also just place AMC in a better position, because if their investment were to tenfold or whatever, they will obviously have more money. And we talked about this in our previous video, where paying off debt, improving infrastructures, investing into more things, issue dividends, all of these things are obviously able to put AMC in an even bigger position. Now, furthermore, you can also see the domestic yearly box office, where we're taking a look at 2025, and we can see that it's increasing again in comparison to 2024. Now, this is obviously very important, because ultimately what we need to know is how AMC will do this year. Like we said, AMC has made their business structures extremely efficient. So even if we were to have the same amount of box office as last year, we would actually still make more money than last year. But of course, if we are able to do even better, then that puts us in an even better position. That obviously means that we can make even more money. And that's ultimately what we are looking at here. And if you want to know more of the outlook, we obviously just talk about box office. You can even see that Adam Aaron said AMC looks forward with great excitement to the deluge of big movie titles that will be gracing our theaters during the coming peak summer movie season. Now, we've already obviously seen some of the movies that's come out, and essentially this is what we should be looking at, is going into the future, we have so many more. Now, the box office has already improved in comparison to last year, and it's actually going to get even bigger. We're obviously seeing that what Adam Aaron is calling the peak summer movie season, and so that's something that's extremely exciting that we'll be waiting for. And so if you want to see and understand where the best earnings will be for AMC, and it potentially could be the peak summer season. Of course, that isn't to say that is definite. Of course, there will be some that will still do very, very well, but ultimately, the fundamentals is very important. And right now, what Adam Aaron's doing is obviously highlighting how we are going to be seeing the fundamentals going into the future. You can also see it when you take a look at the technical analysis. Now, we've shown plenty of technical analysis on this channel. We've seen different indicators, different patterns being used, and it all leads to one thing, that right now we are all supposed to be looking at the bullish sentiment coming in. Right now, the charts are all lining up for that breakout. And that itself, again, paired up with everything that we know that's something that should have happened. We already know in the first place that the price reflection isn't real, that we are not seeing real price discovery. And so whilst we are talking about the technical analysis, again, I want to highlight, this is something I've covered in the past before, is that technical analysis is very useful, but when it comes to AMC, a stock that's being extremely manipulated, we use it to understand what the sentiment for the market is. It allows us to understand how the investors are feeling about AMC. Whether or not it actually breaks out is completely different, and that is just for AMC and GME and just some of the other highly manipulated stocks, because the market makers don't actually want AMC and they can't afford for AMC to break out. But it gives us a good indication of what the investors' sentiment is like for AMC, and we can obviously understand it is extremely bullish. You can also see which major, so it is in reference to this, which major bank would collapse due to unrecognized losses. And you can write, that's right, UBS afraid to expose those AMC swaps from Credit Suisse. So some of the things that we talked about, if UBS were to report the Credit Suisse swaps, some of these banks would collapse because of unrecognized losses. And you can see some of the ones mentioned: Morgan Stanley, Goldman Sachs, Deutsche Bank, and UBS, of course. And this goes back to what we said at the very start. Some shorts can close and exit, but some shorts can't. The reason for this is because when we're looking at shorts that are extremely big, like UBS, because of their swap positions, they are not in a position where they can close, because if they were to close, it could wipe out the whole value of UBS. But not only that, the effect it will have on other firms as well, potentially wiping out Morgan Stanley, potentially wiping out Goldman Sachs. And so it's why we talked about how some shorts can't actually exit. But that's why potentially we're seeing even the smaller shorts not exiting, because they actually are in a position where they've been held up by these larger companies saying that they can't close, because they understand even if the small short sellers were to close, it can trigger the squeeze. Like we said, it isn't that UBS closes and the squeeze will trigger. Of course, that is the case, but that isn't the only factor. We know that there are multiple factors for the squeeze to happen, and one of the easiest ways is that if the small short sellers were to close out first, and then that will push the mid short sellers to close out, and that will obviously go on to the large. We talked about the domino effect, the snowball effect, and that's exactly what it is. But you can understand why they are extremely scared. You can see CFTC, UBS can high Credit Suisse swaps indefinitely. So we talked about how it's obviously very, very worrying with these swaps, how it could wipe out other people. But that itself is the indication that the risk is so large or complex that the FTC believes enforcing margin and clearing rules now could cause chaos. And so that's what we have to understand with what's going on right now. If you want to understand the scale of the squeeze for AMC and GME, by understanding that this is what they're enforcing right now, by understanding that this is how they're trying to get rid of it, it should let you understand. Because they understand that it isn't just going to be one major bank's collapsing, but actually multiple. Now, you can only imagine what will happen if UBS, Goldman Sachs, Morgan Stanley were to all get wiped and bankrupted. The unstable effect it will have on the market will obviously be extremely worrying. But that is, of course, what they've dug up for themselves. Now, with the regulations, the financial institutions obviously don't want that to happen, is why we're seeing them do this right now. But that is just to highlight what we've talked about with how big this situation is. And you can even see, going deeper in Citadel securities, they have exposure to non-US currencies directly or indirectly through financial instruments, options, swaps, basically have forex hedges. Now, this is something that we've talked about in the past, and we'll actually go more depth into this on another video. But essentially, it's understanding that they have their collaterals in other instruments as well. Now, that of itself isn't a surprise. It's very, very normal for a hedge fund that size. But when we talk about the Japan market, when we talk about the European markets, and we talk about how actually they aren't doing well as well, and again, add on top of that, we've seen Citadel closing their positions that are overly leveraged. We've seen them post a loss in March, in February. And now we're seeing how their overseas positions aren't doing well as well. That's what we talk about when we say the first short to go. But yeah, guys, thanks for watching the video. I'll catch you guys next time.